everybody, Matt Faircloth here. Welcome to the DeRosa Insiders Live Show. If you want to learn more about DeRosa Group, go to derosagroup.com. And please enjoy this program that is dedicated to help you learn all about the real estate investing business so that you can take your real estate investing activities to the next level. Let's get into the show. What is happening, DeRosa Insiders community? My name is Matt Faircloth, and this is the DeRosa Insiders live stream program and podcast. As I said, our company is the DeRosa Group, and this is DeRosa Insiders for you guys to see the inside look at real estate investing so you guys can take your real estate investing businesses to the next level. Now, we're going to be bringing in a good friend of mine, one of our DeRosa Accelerator program students, and somebody who I think is really on the move, you guys want to keep an eye on, and somebody who's going to be teaching us a lot about putting boots on the ground, investing in a certain market, growth in a certain market. My good friend, Lionel Allen, good to see you, man. How are you today?
I'm doing well. Good to see you, Matt.
Being someone that's fully immersed and climbing the commercial real estate ladder, taking on bigger and bigger deals, what's been your experience so far? What are you seeing for someone who's looking to buy more deals and grow? What are you seeing right now?
Seeing two things. Some of the old adages are still true, location, but when you're doing commercial real estate, you need to really look at the market behind that location of the real estate. So understanding more around due diligence, understanding how to read and predict demographic data, how to look at what's undergirding the economy of a particular market you're looking at. So the diversity of employment factors through different sectors. I understand real estate. I understand healthcare. So those are things that I gravitate towards. But then there's also some new factors. Changing interest rates, the shorter terms with commercial real estate. And then, like I heard on one call, the Category 5 hurricane that's currently happening in commercial real estate. Understanding that there's certain assets and asset classes that are being sold at a discount for some of the same reasons that you gave in your intro pitch a little while ago. There are some markets that are getting new product, and that product is affecting the existing product. So there's a couple of things happening. Some of the old adages of buy right, try to cash flow from day one, pick a great location. Those are still sound, but there's some new factors with how politics and legislation can also impact the industry that we really need to be concerned about. And then, of course, there's the biggest one of them all, insurance. Insurance is a new thing that's affecting us in a new way. Being an operator right now, you really have to have a lay of the land, understand where these pitfalls lie, and then still rely on sound principles like you teach at the DeRosa Group on how to identify a market, and then also how to build the relationships you need to operate in that market.
So you're in a market. Tell us about where you are, the market and that you've chosen to invest in and why. And then I want to unpack a bit about because I happen to know, because you and I do some coaching together, and that I happen to know what you're seeing out there with regards to some specifics. I want to unpack that. But before we get there, tell me a bit about the market you've chosen to be the sandbox you want to invest in.
I'm glad you asked. So with the exit out of corporate America and with that summary I gave about budgeting and forecasting, as a family decision, we decided to exit from California. So we had a list of about 6 different states across the East Coast and the Midwest. We're originally from the East Coast. Our entire family is on the Eastern Seaboard, so we wanted to be closer to friends and family. So we began to look at different states to exit from California to, and we landed on Georgia, specifically the Atlanta metro area. But as I began to look at that area, it was ideal for us with some of the requirements we had around the size of our home, working from home, and having the amenities at home that we all realized we needed after going through the pandemic. But then also wanting access to community, great public amenities, parks, and also the school system here in Georgia, and also a lower cost of living compared to what we were experiencing in California. So that's why we chose the Atlanta metro market. But then as I began to look at the business component of it and looking at secondary markets where I could get started, begin to put down roots, analyze deals that I could acquire at a lower initial investment, begin to do some capital and some management improvements, and be able to run these deals more optimally. I focused on the Columbus Warner Robins market, which is the second largest metro area in the Atlanta area. It's supported by 2 large military installations. And then there's just a whole host of industries from automotive, healthcare, zipper manufacturers, school bus manufacturers. They're all here in that area.
I love it. Love it. Is Miss West still a hotbed, Danny? Great question, Danny. What we actually shot a webinar on the Midwest versus the Southeast. I didn't want to make Lionel upset because he's invested in the Sun Belt Southeast there. Depends on the market in the Midwest, Danny. We believe in it at DeRosa. We also believe in the market that Lionel's in, because there's no one market that's successful. If you want to tell me where you are, everyone tells me Columbus area is booming. There you go. Columbus, Ohio. Yes, because they're building a chip plant there. There's an Intel is building a big chip facility in Columbus, Ohio. And you also got a couple of colleges there and everything like that. So yeah, sure. But you got to look at jobs. You can't just name a region, right? Because I could say, hey, Lionel, I'm going to go invest in Baton Rouge, Louisiana, because that's in the Sun Belt. Baton Rouge doesn't have the job growth that where you are, where Columbia, Georgia does. And nor does it have the job growth that, let's say, Minneapolis, Minnesota does. Minneapolis is one of our target markets. The DeRosa has 3 projects going on right now. So, Danny, it really depends on job growth in the market. Jobs drive rentals. Jobs drives housing. We are no longer in a pandemic market where moving someplace because it's cool or because it's fun or because you can surf there is a place that's going to create a long-term prosperity. We're no longer in a Zoom economy. Most people need to go to physical work. And so you're going to be looking at markets where there is physical work being created, blue collar and white collar jobs. So where Lionel's at, Columbia, Georgia. Yeah. Columbus, Georgia also. And make sure we're not talking about Columbus, Ohio. I think that's what he meant. Yeah. But Columbus, Georgia is a good market. Do people commute, Danny or Lionel, from Columbus to Atlanta or too far?
It's actually too far. But what we're seeing in the Atlanta metro area as the influx of people just coming to the state. So not just people like me who came from California. The largest demographic last year actually came from the state just south of us, from Florida, because there was a large migration of people to Florida. But Florida just doesn't have the same employment factors to support that large population migration.
A great tourist market.
So, right. So people started moving back north to Georgia with the industries. I'm glad you pointed that out. One of the things that also led me to Georgia was because of some of the restrictions and how long the state was shut down during the pandemic. They really, in a short time, got people back into offices and kept their industrial sectors really intact, which was something that I saw on the West Coast, which was not the same. We were shut down for much longer. And as you see with some of the numbers coming out of San Francisco and other Western cities, it's hard to get people back into the office now.
Yeah. No, absolutely. We have markets like Honolulu, Hawaii, Lionel, had a major incentive program for people that were able to negotiate with their employer to work Zoom to allow you to live in Honolulu. If I live in Honolulu and my employer lets me work Zoom, I might not be on my desk Monday through Friday, 9 to 5. I might make like a bobblehead version of myself, Lionel, so I can be here while I go surf. But a lot of that has ended. And so now, and what it works for multifamily is not everybody's working for Zoom that lives in multifamily. It works on Zoom that lives in multifamily. People need to physically go to work. That's everyone that works in the service industry, those that work in a lot of the blue collar workforce areas. And that's the heart of America, is in a lot of those job sources that are out there and everything like that. So to think that employment can be detached from housing location is short-sighted. Employment is really what drives a lot of these things. Danny, I'll get to your question. Is you're pivoting me onto Airbnb. I want to get with you, and we'll go there, Danny. Just to hang tight for a second. My fellow Trenton landlord. I'm a Trenton landlord as well. Trenton, New Jersey, my friend. But I want to keep going with Lionel for just a second here until we hop in Airbnb for you there, Danny. So Lionel, in the market that you're in, in there in the like greater Atlanta and in the Columbus, Georgia, you've seen all kinds of different things. You've seen newer built A-class stuff by brokers, and you've also seen some off the market stuff. Give us some specific details and stuff that you've come across and how you were able to dig so far into the market and become so entrenched that you're starting to see all full spectrum of deals coming up for you.
I would say visiting the market, becoming really familiar, allowing your face to be seen. And this really dovetails with our previous point. There is a lot you can do in real estate virtually. You can Google Earth and drop yourself on a pin and spin around and
walk around. Yeah.
You can do all that stuff. But who knows that you did that stuff? The agent selling the property, they didn't see you. They didn't see your pin drop in front of the property. Maintaining real estate is still very much a real relationship business. So going and talking to local lenders, that's advice I've taken from yourself, Matt. Talking to local lenders, finding out if there's at-risk assets that they may have loans on. Talking to local brokers who are looking and doing business in that area, looking at their deals. Even if the deal doesn't pan out, underwrite the deal, send them some feedback about the deal, call them weekly. And then they're more in tuned and open to showing you some of their off-market deals. And that's happened for me recently. Just talking to the same broker, looked at some of the things he had online, toured it. One I was going to write an offer on, missed out on it. There were others that didn't fit in my buy box, but I still took the day, went out with him, toured all the sites, and then he matter-of-factly mentioned, hey, there's this other property that I have that's not on the market. You think you want to see it? Yeah, and that's the one I did write an offer on, and I'm pretty close to getting that into a purchase sale agreement now. It's just being out there, building relationships, and then presenting with a really professional appearance, from the way you show up with branded clothing or just being intact with your attire, having a website, having a professional email, having a broker packet that tells a little bit about you, your company, what your buy box is, what area, what types of property you're looking for, who's all a part of your team, what's the experience level that you have. And these are the things that make people more comfortable and allow them to open up and want to do business with you.